of your trades the week ahead, and what a week it has been. Struggled to hold on to 6,000, but on a net basis, we've lost 1%. And on Friday, we closed just about at that 59.50 mark. Had it not been for Friday, we could have done much worse.
Yeah, the only solace is that the earnings season has kick-started on a nice note. A smaller bank, a larger IT player coming out with a good set of numbers.
Oh yes, so first let's start off with the good news. The IT index, which held up very smartly. In fact, the CNX IT index put on about 7.8% in the green, and all thanks to Infi's numbers ahead of street estimates, no guidance cut, and that really was welcomed by the market. So that really propped up the entire IT basket with it. And the gainers included Infi, Wipro, HCL Technologies. All these stocks held up very well, and there you can see the spike up ahead of street estimates, no guidance cut, and that really was welcomed by the market. So that really propped up the entire IT basket with it. And the gainers included Infi, Wipro, HCL Technologies. All these stocks held up very well, and there you can see the spike up only coming in Friday's session. The losers: FMCG, cap goods, consumer durables, metals. The power index lost about 3%, and banks as well lost about 1.3% too.
Well, Infi top gainer, no prizes for guessing. Some of the losers included Ambuja, Ultratech, L&T, BHEL, HUL, mid-caps, and some gainers out there, included in Amara Raja Batteries, maybe even a TVS Motors. So these were a couple of stocks which did well. Suzlon was up close to 4.5%, but lots of losers. Balrampur, Aurobindo Pharma, more importantly, an Arshia International or a Parekh Illuminex. A lot of these stocks went down in a heap this week. So it was fairly iffy in that sense. The question mark really remains what to do in the week ahead. Lots of earnings lined up as well. Very quickly get on our guest to speak about this. Just kickstart the show, Dr. C.K. Narayan, to speak about how the charts are shaping up. Dr. Narayan, good having you. Thanks so much for joining in. Good evening. What's your sense, Dr. Narayan? I mean, the first week of the year was excellent. Somehow this week has been iffy. More importantly, because as the day has progressed, for most days this week, we've seen some nervousness in the market.
Yeah, I actually wouldn't say some nervousness. It would be better to categorize that as very high level of nervousness, because all across the week, if you notice, there were days of, a little bit of extreme moves, particularly towards the end of the day. And this all happened without any, seeming news or any kind of overt event, which probably highlighted the fact that, traders as a class do not have too much commitment to their positions and are more prone to just simply following the price trend in whichever direction it goes. So you had this big dip on Monday, it pulled back on Tuesday, it dropped again on Wednesday. So, traders got whipped around this week compared to a reasonably smooth movement that we saw in the week earlier. So they made money in the week earlier and I think dropped a lot of money this week. And except for those who were fortunate enough to be long in IT stocks, I think this week might have been, pretty much of a washout, because most of the stocks didn't really do as well to bring home the money. So I think we are leaving the week a little iffy, as you rightly put it. It's very essential that the week ahead should actually pick up from here and start making tracks upward, maybe buoyed up by what has happened in the IT sector. But I have my little bit of doubts on that, because the rest of the breadth of the market was rather weak. It was weak right from the word go today. In futures was running to about 100 declines to about 50 advances, which progressively became worse as the day wore on. So I'm not very charged up for the week ahead, and I would proceed with a little bit of caution, seeing whether the market can indeed hold its own at these levels near 6,000. If it fails to do that, I might even think of some intra-week low to be created before the matters could become better.
And clearly, the shining star this week has to be Infosys. What a stellar performance coming in, and way ahead of what the street was expecting, a guidance cut. So nothing of that sort. Good going for this one, and a thumbs up coming in. Good time then to bring in Sunita Nagpal to recap what transpired on Friday post Infi's numbers. Sunita.
Indeed, what a way to close the week with. Infosys closed the week with roughly about 16% gain. It wiped off all the 2012 losses it had made in just one day after the announcement of Q3 results. The results were more than positive than what Street was expecting. Remember, the expectations were low when going into the results, but the company surprised very positively. The revenue momentum is back, and what is more important is that the company did not cut their organic growth guidance, which was more or less given. Analysts were expecting 1.5% kind of cut. The company maintained the guidance, organic growth guidance at 5%, which is seen positively, which also implies that Q4 outlook is also strong. They're expecting revenue growth of roughly about 4% in the next quarter also. If the company is able to maintain this momentum going forward, we could expect further re-rating despite the pop that we've seen in today's stock price. If you look at what most of the analysts are saying, analysts were expecting a 514 EPS at roughly about 174. Now they're talking about the company can do roughly about 178, 180 rupees EPS in the next fiscal. And if there is a re-rating based on the sustained momentum as far as revenue is concerned, we could see the stock touching roughly about 2,900, 3,000 in coming months. That's what the street is expecting now. And indeed, it was a very, very pleasant surprise coming from Infosys after a disappointing 10 quarters. And it is a way to close and start the 2013.
Okay, Sunita, thanks a lot for that. Thanks a lot for bringing us that update. Well, also joining us on the show on the Fundamental End is Pramod Gubbi, VP of Institutional Equities at Ambit Capital. Pramod, good having you. Thanks much for taking the time out. And you saw what Infosys did in the session on Friday. The question mark really is, one, how much more upside, if at all, for Infosys? And two, next week, a lot of these bellwether names coming up as well. Do you think that they could also probably give such a bout of outperformance?
Yeah, firstly on Infosys, definitely a pleasant surprise. We've been fairly skeptical on Infosys for the last couple of years, and even for us, the numbers seemed really promising. But if you delve deeper into the Infosys results, you'll see that much of the surprise hasn't come from the traditional mainstays of US as a geography and application development maintenance as a service line. Infosys has been known for these two things. That's been their main strong areas over the last couple of decades. For the first time, you're seeing new regions such as Europe, India, and the rest of the world picking up. You're also seeing new service lines like remote infrastructure management, BPO, consulting, and system integration picking up. Now it's heartening because from a strategic standpoint, this is something that analysts and investors were hoping for, that Infosys manages to successfully break out of its historical areas into newer, faster growing areas. The only thing that seemed to be holding them back seemed to be the fact that some of these newer geographies and service lines are relatively lower margin, which somehow the market had come around to believe was a mindset issue for the Infosys management to shift focus to that. If you see the numbers, although there was significant outperformance on the top line, at the bottom line level, net of the currency impact, the margins were slightly lower, and hence the impact wasn't that great. So whilst it is definitely a positive surprise from a growth standpoint, it is also heartening to see that there seems to be some sort of a mindset change for Infosys to sacrifice a bit of margin and focus on growth. In terms of how much more is left, to answer your question, I think these are early days yet. This is pretty much the first quarter in, I guess, last 10 quarters that Infosys actually delivered a decent set of results. So this is just the beginning. We'd like to see more of these, and obviously we'll go back to our industry sources and get a sense of how meaningful is Infosys' change in strategy and mindset, and is it bearing fruit at the ground level in terms of order wins and penetration into newer service lines and geographies.
Okay.
As far as what was expected from the other IT, sorry?
No, actually, we will come to that in just a bit, Pramod. Let's stay on lots of earnings expectations from other companies as well. Let's just first finish talking about this week's stocks. And from large caps, a lot of large caps were weak, onto the mid caps as well, which made some news. Arshia International was in focus. Ajay joins us to speak about all that happened with this company. 43% in a matter of 3 days lost. Ajay, tell us.
Well, in a matter of 3 days, the stock of Arshia International is down almost 50%. That's a huge erosion in market cap. It all got triggered by a pink paper report that there are severe financial crunch into the company, and 290 employees have been laid off, and those employees actually raised an alarm about the financial condition of the company. However, the management came out and clarified that there was no financial crunch. There have been minor delay in employee salaries, but that does not amount to a huge financial crunch, and only 20 employees were actually laid off on rationalization of employees and conduct and performance related issues. However, the continuous downtrend in the stock price was also due to the large amount of promoter shareholding actually being pledged, and there was a buzz on the street that this pledged shares were actually being sold off by the lender. However, we have to really see that in the next few days how the fall in this particular stock gets arrested, because one section of the market is starting to see some value in the stock after it is down 50%.
Okay, we'll leave it at that, Ajay. Clearly, Arshia International was making the headlines all this week, but good going for the mid-caps as well, and a whole host of movers there. Gargi is here to sum up some of those. Gargi.
Well, one of the big movers for the week, TVS Motor, a good 7% increase coming in the week for TVS Motors. There's a new launch that the company announced, the bike Phoenix, which is likely to take the volumes up. Volume growth expected to, increase in the next quarter or so, and that's the anticipation coming in for TVS Motor. On the back of that, we saw some good move coming in on that one. Some decliners, and Bhushan Steel saw, some sentimental reaction coming in. Remember that the promoters are, related. There are some family relations with Arshia Group, and probably a sentimental reaction coming in on that front. And post the decline, the lower circuits that we saw on Arshia in the last 3 days, that probably also panning out for Bhushan Steel. We saw some negative reaction coming in on that one, and I believe it declined over 10% on the Thursday itself. Also take a look at Aurobindo Pharma, and dealers saying that some profit booking happening in that particular counter, and they indicate that the third quarter earnings could disappoint, and that's what the street is anticipating, probably on the back of that, the selling that we saw coming in on Aurobindo. Also take a look at United Breweries, and we saw a consistent 4 to 5% decrease coming in the last 3 trading sessions, and there are rumors of some tax evasion, some allegations of tax evasion against the company, and we've not got any confirmed reports on that, but some rumors floating around this particular news, and on the back of that a decline in this counter too.
Okay. Thanks for that, Gargi and Ajay. But Dr. Narayan, a couple of these key movers, one of them is Aurobindo Pharma on the small cap space. The other on the large cap space, stocks like Ultratech and Ambuja, essentially the cement pack. How do they look on the charts?
I think cement is witnessing some amount of selling. You are seeing OI erosion, across the week. They were among the big losers in terms of price. Clearly, if you leave aside Ultratech, ACC, Grasim, Ambuja, they're all on a decline. Ultratech had preceded them on a decline, so there may be a little bit of recovery, but I don't see them as big gainers across the next week, so they may continue to remain under pressure. There is some talk about possible hike in cement prices, which might produce a rally, but this should be used to sell. As far as Aurobindo Pharma is concerned, I think it ran into some significant higher level resistances, which has pressured the stock, but then it's down to about 180.85, where there is good support. So maybe a ranging action across the next week is what I would expect in Aurobindo.
Now we talk about what's expected the week ahead. TCS and Wipro as well as HCL Tech coming out with numbers. TCS expected revenue growth of 2.7% on a quarter-on-quarter basis. Wipro 2.4%. HCL Tech, the deal wins would be the ones to watch out for as well this quarter too. So lots expected from these companies. Pramod, you were just speaking about it and after Infosys. And these 3 major earnings coming out the week after, how do you expect these stocks would do? And how do you expect the earnings to be?
I think most of these, all 3 of them, all 3 big IT should be in line, if not slightly better than expected. I don't think any of them were as distinct in terms of expectations as Infosys was. Perhaps Wipro a bit falling into the Infosys bracket, but TCS and HCL have been delivering for the few quarters, so expectations are already high. So it's unlikely that the surprise will be as meaningfully higher like Infosys. But yet we think that drawing from the Infosys results and also our understanding of broader market, both TCS and HCL should deliver. Wipro should also deliver, but all eyes should be on Wipro's guidance, because the 2.5% expected from Wipro is still middle of the line, and it will end the year middle of the line. But all eyes on the guidance going forward and commentary around deal wins.
Okay, IT aside, the next week is also going to throw limelight on autos as well. Two nifty names, Bajaj Auto as well as Hero MotoCorp, coming with their earnings next week. Yatin's here to tell us what the street is expecting. Yatin.
Well, both two-wheeler majors, Bajaj Auto and Hero MotoCorp, will report their quarter 3 earnings next week. We have Bajaj Auto, wherein revenues are anticipated to grow by nearly 7% year-on-year, which is led by a 5 percentage points increase in their volumes year-on-year. Also, we have the profitability, which will be lower by nearly 4% on a year-on-year basis for Bajaj Auto, largely to do with the fact that their exports to markets like Sri Lanka and Egypt have been declining, and also their tax incentives at the Pantnagar plant will be lower versus last year, and that is the reason why their profitability would be slightly dented on a year-on-year basis. If we talk about Hero MotoCorp, and quarter 3 earnings are expected to be muted. Sales seen up by nearly 2% because of flat volumes and slightly better revenues. Their revenues would be up by nearly 2 percentage points. Their profits are expected to be lower by 6% on a year-on-year basis, largely to do with the fact that their volumes have been flat on a year-on-year basis, and that is why the operating performance would be impacted because of higher costs. If you talk about quarter-on-quarter performance for Hero MotoCorp, that will be improving slightly on the margin front because of better realizations and a favorable currency movement.
Thanks a lot for that, Yatin. Firstly, on the charts, how do these stocks look? Dr. Narayan, ahead of earnings, Hero Moto as well as Bajaj Auto?
Clearly, between the two, Bajaj Autos to be preferred, because the trend in it is much better compared to Hero, where the trend is more sideways. I think if bad numbers were to drive down Hero Motor for any reason, then 1750 around is where one should expect some support. It's been a good long-term support. That's where you should look to buy it. In contrast to that, Bajaj is on a consistent rise, so any pullback to around 2100 levels would present a buying opportunity.
Pramod, what is your view in terms of what you favor now, Bajaj Auto or Hero MotoCorp?
I think our preference would be the same, Bajaj over Hero. Particularly what's driving the two-wheeler industry is the entry of new competitors, particularly Honda launching at the commuter bike segment. While Hero has continued to lose market share quarter on quarter, we don't see any abatement in that until unless Hero sorts its R&D after the Honda separation and starts to launch competitive bikes. We think it's primed for further market share loss from Honda. However, Bajaj has surprised us on the upside. It's managed to successfully defend its turf by launching some really smart new models. That held up market share for Bajaj, and Bajaj also has two other drivers in the form of exports and three-wheelers, which should mean that overall volume growth and margin performance should be much better than Hero's. So we prefer Bajaj over Hero as well.
The week ahead, some other index numbers that will come out next week include an Axis Bank, wherein the Q3 NI is expected to grow 15%. NIMs might be stable, 3.5 odd, and of course profit may grow around 15%. The other one would be HDFC Bank, wherein the NII will grow at a stable 20-24%. Profit may grow around 29 or 30 odd percent. No surprises expected as far as HDFC Bank goes. Probably deliver the same stable set of numbers. Between the two, Pramod, HDFC Bank, Axis Bank, and not necessarily between the two, but what's your view on these two banking names?
HDFC Bank, you're right. I mean, no surprises there. HDFC Bank never surprises. It delivers on consistently on what it's been delivering over the last few quarters, or perhaps many years actually. However, our concern about HDFC Bank is the valuation. We can't come around to justifying the valuation that it's trading at, despite the certainty and predictability of its revenue streams. However, Axis Bank, we have many more concerns, not just valuation. I think the focus really will be on asset quality. Our sense is a lot of the restructuring that's been done around the power and infrastructure projects, and more so to be done as and when the commission date approaches, will start adding to Axis Bank impaired book. Our sense is this is the quarter, hopefully next week you should see some increase, material increase in Axis reported restructured book, particularly if not slippages into NPAs. And that's what the market will be watching out for. Our sense is there should be a negative surprise next week.
Okay, the two other big earnings which are slated to come out next week are going to be ITC as well as UltraTech Cement. For ITC, the FMCG business A is likely to break even this quarter. Price hikes are going to widen the Q3 margins of the cigarette division as well. And the cigarette sales volumes may grow about 2%, while the overall sales are expected to see an uptick of 17 to 20%. For UltraTech Cement, the performance in Q3 is likely to be weak, and the higher freight rates as well may erode the EBITDA as well as the margin picture. CK, a quick call on how you'd approach UltraTech Cement as well as ITC now.
See, UltraTech is trading at its highest, so is ITC, so both are in a similar situation. But the sector they belong to seem to be under a little bit of pressure. 275 is where ITC has pulled back into. That should offer some bit of support, but if it fails to do that, and if the market were to remain a little softer, then there isn't anything to really support the stock until it dropped to about 225 to 240. That could be pretty meaningful for any kind of player. UltraTech Cement, it's holding its own. I think 1770, 1750 should be a decent price to buy into this stock. I don't see too much of a drop. If there is going to be pressure on cement, it will be more on India, Ambuja, JP and all those names, and definitely not on Ultra, because this is not a trader-owned item. This is not an item which institutions are getting rid of, so I don't think there's any danger of any big supply coming in. So you will see those normal kind of reactions. So I would say 1750 you should be a buy.
Narayan, very quickly, your recommendations for next week? Dr. Narayan, your recommendations for next week?
Hello, that was for me. Oh, okay. I would like to go long in United Phosphorus. I think a long base breakout is setting up a nice bullish setup over there, but on a pullback to about 130, 32 would be an ideal price to buy it. Stop at about 122.25 and looking for a target at about 145. Second stock to kind of balance up the long, because the trend is a little iffy. Short in Bank of India at about 365, stop 372, looking for a target at 345 to 350.
Afraid out of time completely on this leg of your trades. Pramod Gubbi, Dr. C.K. Narayan, thank you so much, gentlemen, for joining in and with your views. Appreciate you guys taking the time out. That's it on this show from Ash and myself. Thanks so much for watching.